it may seem too good to be true to get out of a mountain of consumer debt in less than 3 years. But I really wanted to take a couple of minutes here and show you how we can do this in this hypothetical example. So let's say we have someone who has a house worth $600,000. They bought it a few years ago. They've seen some appreciation. In fact, literally what we see is that homeowners in America have records amounts of home equity, but they also have records amount of consumer debt. So what ends up happening is it becomes a challenge to keep up with all those obligations. You feel like you're never getting ahead. And so here's a way to make that possible. And again, everybody's situation is different. And that's why at the end of the video, I'll give you an opportunity to schedule a complimentary consultation where we walk through what the best option might be for you. But in this example that is really taken from real life, someone has $600,000 worth of value in their house. Their first mortgage is in the situation where they are able to take a home equity line of credit against their house and consolidate their debt. So in their current situation, their consumer debt, which is going to be credit cards, car payments, maybe some student loans, maybe some personal loans, those kinds of things. And all of those different interest rates and different terms combined together gives you a combined interest rate of 13.95%. So you probably have those car loans, 4 to 6, 7%. You have credit cards anywhere from 20 to 28%. Maybe you have like a balance transfer that is at, 0%, but that's coming due and you're kind of concerned about that. So, um, currently all of those payments on those debts, not including your mortgage, is at $2,846 in this example. If we were to take out a home equity line of credit where we're able to consolidate all of those debts into the line of credit, that actual payment required on that home equity line of credit is only $597. So that is creating an additional monthly savings cash flow of $2,248.93 in this example. Now, what I would recommend is to be very strategic about your debt option and using debt as a tool to help you create financial freedom in your life. So, what I would say is don't pocket that $2,200. Take that $2,249.93 and continue to throw that at your debt. But what's going to happen is most of us are aware that when we have credit card debt and we're making those minimum payments, it's going to take the rest of your life likely to get out of those, and you're spending a lot of money on interest. However, if you do the home equity option and you, instead of paying that minimum payment of roughly $600, you put, all of that savings, or in this example, you're still saving $35 a month. So, maybe you can, buy a pizza or something for, your family one night with that $35. But the rest of it is going to paying off your debt. Look down here. That freedom point is 2.75 years. So if you are, and that is you're totally out of, your credit card debt's gone because you have taken out a home equity line of credit and you've absorbed all of those. Then you got aggressive in paying off that home equity line of credit in less than 3 years. Now, guess what happens at the end of 3 years? All of that $2,846 is yours, coming into your pocket and not going out to pay credit cards, car payments, those kinds of things. Imagine what could be done with that if you're looking at building a 6-month emergency fund. If you are looking at maybe paying off your house early, looking at maybe a 529 for your kids, making sure that you're putting enough into your 401k so that when you do reach the time when you want to retire, you're going to have money to be able to do that and retire with dignity and be able to do the things that you want to do. and not simply be trying to make ends meet for the rest of your life. So that is really how this works. It is a strategic refinance. We're not touching that first mortgage. So if you're worried about, you know, I've got a really low interest rate on my mortgage. I like my mortgage payment. Great. We're not touching that. But what we are doing is we are really being strategic with our debt, and putting you on a plan that is going to give you success. And I'm going to be working with you every step of the way. So if there is opportunity to uh, get you cheaper money than what we are doing at this point, you're going to be the first to know. So as I promised at the beginning of this video, if you would like more information, I'm going to have a link in the comments here for you to uh, go to my information page and be able to schedule an appointment where we can get together and talk about this and how it might work for you to get out of debt faster and create financial freedom. Because that is really what I'm all about, is to help you uh, create wealth through real estate and create financial freedom, be a successful homeowner, and create generational wealth to transform your family tree. Thank you so much for watching this video.